These credits are located on Schedule 3, Additional Credits and Payments under Part 1, Non-Refundable Credits. Line 8 on Schedule 3 carries forward to line 20 on Form 1040. In previous lessons, we talked about the child tax credit, credit for other dependents, child care tax credit, and education credits. There are some other common credits that you may have to deal with. These are non-refundable credits. A non-refundable credit is a dollar-for-dollar reduction of the tax liability and can only reduce the tax liability to zero. Generally, non-refundable credits are applied against federal tax in the order they are listed on Form 1040 Schedule 3, non-refundable credits. The software will calculate these credits, but the correct information must be keyed into the program. The volunteer tax preparer must make the correct determinations by using the intake and interview sheet and resource materials. The Retirement Savings Contribution Credit is a non-refundable credit eligible taxpayers may claim if they made qualifying contribution to a retirement plan. See 4012, Non-Refundable Credits, Retirement Savings Contributions Credit Screening Sheet for more information. Some of these qualified plans include elective deferrals, voluntary employee contributions to a qualified retirement plan, and contributions to a 501c 18D plan. The adjusted gross income test is as follows. There's an age test. You must be 18 or above. You cannot be claimed on someone else's return, and you cannot be a full-time student. If the contribution is tax deductible, such as a traditional IRA, the taxpayer receives the benefit of the income deduction and a tax credit, but contributions to non-tax deductible amounts such as Roth IRAs can qualify the taxpayer for the credit as well. The credit can be as low as 10% or as high as 50% of a maximum annual contribution of $2,000 per person depending on filing status and adjusted gross income. The tax software will automatically calculate this credit and complete Form 8880, Credit for Qualified Retirement Savings Contributions. In most cases, eligible contributions will be listed on the taxpayer's Form W-2, Box 12. Codes D, E, F, G, H, S, AA, and/or BB. Code D is most common. The software automatically carries the contribution to Form 8880, Retirement Savings Contribution Credits, if eligible retirement contributions appear in Box 12. Some employers enter retirement contributions in Box 14. If this occurs, you must select in the drop-down in Box 14, Retirement, not in Box 12, carry to Form 8880 so that the Retirement Savings Contribution Credit will be reflected in the taxpayer's tax return. If the taxpayer makes their own traditional IRA contribution, you must enter it into TaxSlayer. We covered this lesson on adjustments to income. If the taxpayer made a contribution to a Roth IRA or an elective deferral not reported elsewhere, use the form on the Credits menu. TaxSlayer does all the calculations and completes Form 8880. Taxpayers age 65 or older, or under age 65 who retired on permanent and total disability, may be able to claim a special non-refundable credit if they are U.S. citizens or resident aliens. Few qualify for this credit because most taxpayers' Social Security benefits exceed the income limits. If adjusted gross income is greater than $17,000 to $25,000, or Social Security benefits are greater than $5,000 to $7,500, go no further. Note also that this is a non-refundable credit, so if the taxpayer owes no taxes, this credit is worthless. Schedule R, Credit for the Elderly or the Disabled, is used to calculate the credit. The tax software will automatically calculate the credit. This credit is reported on Schedule 3, Additional Credits and Payments on line 6, Box C, Schedule R. See Publication 4012, Non-Refundable Credits tab, Credit for the Elderly or Disabled, screening sheet starting on page G21. This screening sheet is used for determining basic eligibility and a quick reference guide on the income and non-taxable Social Security limits. Part 2 of Form 5695 deals with the non-refundable residential energy credit. Qualifying items are listed on the slide. Note that this does not include washers, dryers, dishwashers, refrigerators, ovens, stoves, cooktops, or TVs. Building envelope components must have an expected lifespan of at least 5 years. Labor costs for installing building envelope components don't qualify for the credit. Home energy audits cover 30% of costs up to $150, but must meet guidelines. Residential energy property covers 30% of costs, including labor, up to $600 for each item. These must also satisfy the energy efficiency requirements. Heat pumps and biomass stoves and biomass boilers, 30% of costs are covered, including labor. These also must satisfy energy efficiency requirements. Amounts of the credit vary by improvement. For example, exterior windows are limited to 30% of cost up to $600. Some improvements do not include labor, only the cost of the equipment. See Publication 4012 on page G20 for details. There are aggregate yearly tax credit maximums, but there is no longer a lifetime limit for the credit. These must be improvements, not original construction items, and new materials must be used. Solar roofs are out of scope. Taxpayers should keep full documentation, including receipts and proof of Energy Star ratings. Just covering this here because you might see some foreign taxes on a 1099 INT and 1099 DIV and need to explain the numbers on Schedule 3, Line 1 and 1040, Line 20. In summary, we reviewed the credit for qualified savings contributions, credit for the elderly or disabled, residential energy credit, and foreign tax credit. Clean vehicle credits, both new and used, on Forms 8936 or 8834 are out of scope.